Good morning, everyone, and welcome to today's special webinar on Controller to FP&A. So, controllership roles are compliance and accounting focused roles, whereas FP&A roles are more into insights and decision making. And how are these two worlds different? We'll try and understand this today and spend some time on understanding how you can transition from a controller role to a FP&A role and why do you need to do that. So, we'll try and understand those things as well. A little bit about us to begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. Over the last 16 years, I've worked in various industries like oil and gas, software, advertising and public relations, and also a shared services of a global commodity trading company. I've served as CFO in India and in the Middle East. I'm now the co-founder of FP&A Professionals Institute. I've mentored thousands of chartered accountants and finance professionals through various initiatives like LinkedIn articles, ebooks. I keep regularly posting on LinkedIn, videos, webinars, and much more. Over the last 5 years, I've been an active online instructor. I have trained more than 5,000 professionals on various aspects like FP&A, data storytelling, business partnering, finance leadership, CFO coaching, and much more. I'm happy to join my partner today, Asif Masani. Also, I've had the privilege to host about 10 CFO events. Somewhere I've hosted the event, somewhere I've been a speaker, somewhere I've been a panelist, and I'm personally connected with more than 200 CFOs across India and the Middle East. I'm happy to partner with my co-founder, Asif Masani here. Asif, a quick introduction.
Yeah, thanks, Awal. Little bit about me. I've been working in finance and more specifically in FP&A for more than 10 years. So I started in 2013 with Citibank as an FP&A analyst. And most recently, until 2023 end, I was leading the team for APAC and India. And just give me a moment. I'll just mute everybody so there's no background noise. Dawal, you can unmute yourself.
Yes.
Okay, perfect. So I worked with multiple companies in FP&A roles and also I've written a couple of books on FP&A. So the two books that you see on the screen all about FP&A, that was back in 2022, sold more than 5,000 copies by now. And I keep getting messages from people who read the book almost every week. And the second book is from Accounting to FP&A that was released about 6-8 months back, and that has also sold 1,500 copies. Both have been Amazon bestsellers for a couple of months during the time when they launched. I've regularly been contributing to FP&A as a thought leader, so I've been writing articles, creating videos, and that is what we like doing. And I'll talk about more maybe in the next slide. So over the last 3 years since I've been starting to write and since we've been training, I've also had the opportunity to connect with top FP&A experts across the globe, right from North America, Europe to Middle East. And we try to bring in all the expertise and all the knowledge through all our content, which are books, podcasts, courses, and certifications. FPI started back in 2022 when me and Dhawal met. So Dhawal already had a Udemy course which was doing very good, had more than 2,000 students. My book had sold more than 3,000 copies by then. And that is when we came together and we did, I think that is an old slide. We've done more than 18 cohorts now. More than 500 students have taken the FP&A Masterclass live, which is a 4-week FP&A program, introductory program. And we've trained more than, so there are 13,000 plus people on our platform who have taken one of the free courses or free resources, and we've trained more than 3,500 students across all of these courses that you see on the screen. And most recently, we've launched and completed 3 successful cohorts of CGFP, and the 4th cohort is right now in progress. So CGFP is a 6-month in-depth FP&A certification, which is accredited by CPD, and that is what we will touch upon a little bit maybe at the end of the webinar today. With that, I'll give it back to Dhawal and we'll talk about today's topic and agenda.
Fantastic. Happy to partner with you, Asif. And one important thing that connects Asif and me is our extreme passion for helping finance professionals upskill themselves. So that's what connects us together. So what are we going to cover today? Over the next 60 minutes, it's going to be a fast pace of the distractions and focus on what we are covering here today. We'll try and understand the difference between the controller world and the FP&A world. What does a controller or a compliance-focused role look like? And what does an FP&A role look like? And what are some of the differences? Some of the key activities in FP&A, along with some examples, right? What are some of the key activities like budgeting, forecasting, management reporting, and also some tips and strategies about how you can transition from a controller role to an FP&A role, and what are some of the options available for you to learn, acquire certifications. All of those things we'll cover by end of the session today. So all in all, an exciting next 60 minutes. Get rid of all the distractions and let's get started. First is, let's start by understanding the office of the CFO, right? A CFO in any company, small, medium, large, has three main responsibilities. One is the controllership function, where you have your routine hygiene, accounting, AP, AR, GL, statutory audit, tax audit, internal audit, SOX audit. All of these things come under the controllership or the compliance-oriented roles within the CFO's office. And then there is treasury. It's all about cash management, banking relationships, forex management, working capital loans. All of these things come under the treasury department, where you are primarily managing money of the company. And then comes FP&A. Somebody needs to keep an eye on the performance of the business. How are we doing? What is our budget? What is our forecast? What are our targets? How are we pricing products? What are our gross margins? What happens if we increase our price by 5%? What is the impact on profitability? All of these different kind of scenarios are worked out by FP&A teams. The primary responsibility of FP&A is to provide insights on a timely basis and accurate basis, so that CFO and other senior leaders in the company can take informed financial decisions. Primary activities in FP&A include budgeting, forecasting, and some various financial analysis and management commentaries as well. And we'll look at some of the examples today as well, right? So these are the three responsibilities of a CFO, and that's why FP&A enjoys this unique position of sitting very close to the CFO's office, because that is what helps CFO take decisions. That is what helps the senior business leaders in the company take certain important financial decisions. Now, how are the controller and FP&A worlds different, right? So what are the differences between a controller role and an FP&A role? Again, it depends from company to company. In some cases, the controller function may also handle FP&A if it's a small and medium enterprise. But largely, if you look at a large company, probably I would say $100 to $500 million plus kind of an organization, then the controller and FP&A functions are completely separate. Controller functions are focused more on compliance, financial reporting, and FP&A functions are focused more on the commercial stuff and decision support. So that is what is the difference between controller and FP&A role. So let's try and understand the differences a little bit more. The focus of the controller role is largely on the compliance bit, where we are talking about reporting, audits, understanding the historical performance, investor relations. All of those things come under the controller's ambit, and making sure that the accounting is adhered to, the accounting rules and the gap and everything are adhered to. Whereas in FP&A, the main focus is actually forward-looking insights. What are we going to achieve in the next quarter? What are we going to achieve in the next? How is the 9-month forecast looking like? What are some of the trends that we can try and capitalize on? All of these come under the ambit of FP&A. Here we are looking at the estimated financial figures that we are trying to aim for, right? So we are looking at a forward-looking function, which is FP&A. Stakeholder interaction. Here you're largely speaking to accountants, auditors, regulators, tax consultants, tax authorities. All of that happens to be under the controller function. Whereas in FP&A, you are primarily supporting on decision making. So you're talking to C-suite, you're talking to business unit heads, cross-functional teams, HR, CEO, business unit leaders. All of those things come under the FP&A function. Then what are some of the technology conversations that are happening in these two functions? In the controller world, it's all about making sure that your financial reporting is correct. So your conversations, your tech conversations circle around your ERP system, what customizations are possible in ERP, what optimizations are possible in the ERP system. That is what the technology conversation in a controller function looks like. Whereas in FP&A, you're looking to leverage tools, which are planning tools, BI tools, business intelligence tools, planning tools. How do you improve your forecast? How do I automate my real-time forecast? How do I introduce driver-based planning? All of these things are the tech conversations that are happening in the FP&A function. Then comes your budgeting and variance analysis. In the controller world, you're looking at historical performance and saying, okay, why a certain reason for a certain department for achieving lower revenue or higher cost, or as the case might be. Whereas in FP&A, you don't generally look at the past. Yes, you do explain the past with a little bit of management commentary, but you also try and discuss about the future. How do I reallocate my marketing budget? What can I do to improve my conversions on marketing spends? What can I do to improve or plug the shortfall that the revenue shortfall that we got in the last quarter? So these are the kind of conversations that are happening in the FP&A world. So I hope you are now able to appreciate the difference between the controller world and the world. Now, what kind of day-to-day questions come to you when you are working in the FP&A function. Let's look at some of the examples. We won't be able to cover all the questions, but let's look at some of the examples and try and understand how does a typical FP&A day look like. What is the given revenue target for our department? Let's say a business unit head walks into your desk and say, hey, can you tell me what is our revenue target for our department or our business unit, right? This comes from your revenue forecast. This comes from your revenue budget, depending on the document that you are referring and the stage of the financial year you are in. How much have you set aside for LinkedIn marketing for this year? And what is the quarterly breakup? A classic question from a marketing director, right? He would walk into your desk, or you would walk into his room and say, okay, here is the LinkedIn marketing budget. $100,000 is what we are going to spend on LinkedIn marketing. Out of that, we can spend 40,000 in Q1 because it's the season time. Whatever your logic is, whatever your assumptions are, you will help them understand, help the marketing director understand. Then HR would come and ask you, okay, out of the 50 headcount additions that we have planned for the next financial year, how many can we hire in Q2? How many can we hire in Q3? So these are a classic questions that might come to you from HR head. And based on the performance of the business, you will have to tell them that, hey, if we had met our revenue target, we could have hired 20 people, but now we are falling behind. Then do we really need 20 people? Why can't we hire 18 people? Why can't we hire 17 people? So these are the kind of conversations that you will be having with the HR director. How much new business do we have to bring in Q4 to cover our shortfall in Q3? Classic question from a CEO or a business unit lead. They will say, okay, this was the shortfall in Q3. $100,000 was the shortfall in Q3. How can we plug this in Q4? Do we adjust pricing? Do we need to sell more quantity? What is it that we can do to plug this gap? And you'll have to work out some scenarios and explain to them that, hey, if you're able to achieve this, then this could be the scenario and we would be able to plug this gap. So that's the kind of conversation that you're having with the business lead or with the CEO. What is the impact on profit if we drop our prices by 8%? Classic scenario planning question. Right? If you drop your prices, then what happens? If you increase your prices, then what happens? What is the impact on demand? All of these things you assess and then provide insights, options, decision support to the various business team members so that they can take informed decisions. So these are some examples of the day-to-day questions that might come to you in the role. Now, if you notice, one common thing about all these questions is that none of these questions are related to your accounting standards, your IFRS or your GAAP, or any of the accounting rules or your JVs and GLs and all. These questions have nothing to do with your accounting, right? These are all performance management questions, commercial questions, right? So most of us, when we start with our accounting qualification and when we enter into the corporate world, we presume that we know all these things. That's the biggest mistake that I had also done. When I joined a job, people were asking me, okay, prepare a budget for this. I said, what budget? And how do you prepare that? Right? I had no clue about how do you prepare a budget or a forecast and all, right? So these are some of the commercial aspects, largely experiential in nature, which you will have to pick up on the job. Now, what are some of the key activities of FP&A? Well, there could be dozens of small set of activities that are carried out by FP&A teams. But for the sake of this session and limited time that we have, we will touch upon three main aspects. One is budgeting, forecasting, and management commentaries. Now, in budgeting, it's more like an annual business plan that you prepare, your estimated revenue, estimated costs, and your estimated operating profit. Forecasting is tracking during the financial year, right? Let's say I've completed 3 months of actuals, then I would prepare a 3+9 forecast, which is actually 3 months of actuals plus 9 months of forecast. Comparisons, different kind of profitability analysis, different kind of levels of analysis that you do, and prepare your monthly reporting pack so that you can send it to the CFO and other senior business leaders in the company so that they can take some informed decisions. So that would be largely the key set of activities that FP&A teams carry out. Now let's look at each of these and understand each of these three things, budgeting, forecasting, and management commentaries, with one small examples. Okay, let's start with the budgeting example. So today what I've done is I've taken a B2B revenue budget case study. Okay, how do we build a B2B business to business, right? How do we build a budget, end-to-end budget in a B2B company, revenue budget, right? That's what is the case that we'll be looking at. Again, you don't have to solve this case, just focus on the screen. We'll follow it step by step and try and compile a budget for the B2B service company. Okay, Asif, is my Excel sheet visible? Okay, just somebody type yes in the chat box if you can see my Excel sheet.
Yeah, okay. We can see it. We can see
yes, cool. So let's start with the case. Here is the situation in front of you. Again, all attention on the screen, please. You are working with Infosys as business finance manager, primarily looking after client contracts, business unit profitability, and business unit FP&A. So you're working with Infosys, but you are a part of one business unit. You're a business unit manager. Infosys is a B2B software company providing software services to its various clients. The revenue generated by Infosys is largely a split between retainer contracts and projects. Retainer contracts are either a fixed sum of money that you bill them every month, like $10,000 per month retainer or $20,000 per month retainer, or it could be a time and material basis as well. Like you could deploy 5 senior software engineers, 20 junior software engineers, 5 team leaders, whatever. And then you can charge them on an hourly basis, which is agreed in the contract. Like let's say software engineers are being charged at $150 per hour, something like that. And then at the end of the month, you pull out the timesheets, multiply it with by agreed rates in the contract, and you send an invoice to the client. Then there are project-based revenue, where you're looking at a 6-month project or a 7-month project, and then there are certain milestones in the contract. As long as you hit the milestone and complete that particular set of milestone, then you are able to invoice, let's say 15% or 25% to the client, depending on what you have agreed in the contract. That's a project-based model. So retainers and projects. You are required to work with the business lead and prepare revenue projections for 2024. Assume that we are at the end of 2023, and now we have to prepare a revenue budget for the upcoming year, 2024. Senior management guidance is to aim for 12% revenue growth over 2023. Whatever revenue we have achieved in 2023, the senior management's ambition is to achieve at least 12% growth over the last year. Assume that you are now at the end of December 23 and build your budget for 2024. Now, I have this case with me. Typically, how it starts is that I would analyze my historical data, study my existing contracts, and get all my templates ready, and then go into the discussion with the business teams. So here is how we will build the budget now. So I have to build my revenue budget for 2024. Here are my clients that here are my existing clients. Are they a retainer or a project? Then what was the revenue in 2023? The total revenue in 2023 was $125.8 million. Then what is their existing retainer per month? So I get my templates ready. I have my historical data. I've analyzed all my historical contracts. Then I have my template ready where I'll be building my 2024 budget. And then I go into the discussion with the business leads or business teams. And here are some of the notes that I've captured, my discussion notes that I've captured, basis my discussion with the business head. So we look at each of these notes one by one and try and give effect to them, and then try and compile our entire 2024 budget. Now let's get started. First is Visa will renew its contract for 1 more year at the same rate. So Visa is paying us $1 million per month. I'll be a little bit fast, so you'll have to concentrate. Visa is paying us $1 million per month. They are renewing the contract at the same rate. So $1 million will continue till the end of the financial year. Okay. Bank of America contract ends June 2024, and there is a strong possibility that they may not renew. So Bank of America contract is $500,000 per month. It's going to continue till June, and the business unit lead says that it might not renew at the end of the year. Maybe the project is coming to an end. Maybe they don't want to see our face. Maybe they have put out an RFP and want to hire some other agency. We don't know. Right now, according to the judgment of the business director, business head, they are not going to renew after June. So from July to December, I'm not counting any revenue for Bank of America. Okay. IBM has agreed to renew its contract with an escalation of $100,000 per month. So IBM is paying us $1.4 million. They are ready to escalate the fee by $100,000, and next year onwards, they will be paying us $1.5 million. So from Jan to December, I am taking it at $1.5 million per month. Okay. ExxonMobil has decided to discontinue our services from 2024. So ExxonMobil, which is one of the largest clients that we had in 2023, unfortunately has decided to discontinue the services from 2024 onwards. So maybe the 3-year contract has come to an end. Maybe they are putting out an RFP. Maybe they don't like our face, and they don't want to see us anymore. Whatever may be the reason, but ExxonMobil has decided to end the contract. Now, this is also a biggest challenge for us because software services, B2B software services, is a people-oriented business. So what are we going to do with the people who are working on ExxonMobil? We'll see. But right now, the information that we have is that the revenue that's going to come from ExxonMobil for 2024 is not going to come. Let's look at the next point. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st March at $3.5 million. So Microsoft contract has been finalized. Now remember, where are we now? We are in December 2023. Okay. Microsoft has confirmed. They have sent us an email that yes, the contract is awarded to you. But typically in a large services business, what happens is the contract finalization and signing the dotted line takes a lot of time. The legal teams sit on it forever. They at least take 4 to 6 weeks to kind of go through each of these contracts, especially if they are large contracts. And then it takes time for them to kind of finalize this contract. So according to the business director, now we anticipate that the retainer will start from March onwards. So I can take it from March till the end of the year at $3.5 million. See, it may be a 1-year contract, but right now I'm only looking at my numbers till December. That's why I'm extending it in December, right? So it may flow into the next year as well, which is fine. Right now I'm preparing my budget only till December. That's why I'm extending the number till December. Okay. So that's good news. We lost one client, ExxonMobil. We won another client, Microsoft. So let's start with the next point. L&T has asked for a scope and fee reduction of 20% from April 24 onwards. So L&T is paying us $1.5 million per month. They're going to continue with the same rate till March. And then after that, they're going to reduce it by 20%. So 20% of $1.5 million is $300,000. So they will be now paying us $1.2 million from April till December. Now, whatever might be the reason, maybe the scope has reduced, maybe they wouldn't want to continue on some of the projects. Maybe the number of engineers deployed on this client will be lower from March onwards. Whatever might be the reason, the overall scope as well as the fee, both have reduced. And from April 24 onwards, they'll be paying us $1.2 million. Okay. Ministry of Tourism are planning for a bigger project, roughly $4 million, split equally between April and May. So Ministry of Tourism had given us a $1 million project last year. So this year they want to go for a bigger project, which is a $4 million, and they're likely to do it in April and May. Now, we don't know whether it will start on 1st of April or 10th of April. As of now, basis whatever information we have in December 2023, we will split it equally between April and May at $2 million each. Okay. Management aims to achieve an overall growth of 12% over 2023. So what is the 2023 revenue? $125.8 million. Okay. So 12% growth over 2023 is actually $141 million. Okay. Now I'm just taking a tally of all my existing clients and I'm coming at only $87.3 million. Okay. You are the business unit finance lead for this business unit in Infosys. Okay. Now you will tell me, type your responses in the chat box. How are you going to plug this gap? How are we going to go from $87 million to $141 million? Any thoughts, any ideas? Come on, don't overthink this. No Google or ChatGPT, go by your instinct. The business unit head is asking you. You cannot Google in front of him. You'll have to tell. Okay, Kalani sales new deals. Okay, upsell to whom? Upsell to existing clients is already done. We've already spoken to our existing clients. We understood what they are going to spend with us in the next 12 months, and they've already signed those deals. Okay, Vaibhav says acquiring new clients. Inzimam, reducing costs is not the discussion here. We are only still at the top line level. We're only discussing revenue. We haven't come to costs. We're only building revenue budget first. Rework on the numbers again, which means you are going to go and tell the management that, sorry, Mr. CEO, the 12% revenue growth is not possible. Tone it down. You don't know what you're doing. Tone it down. Are you going to tell this to the CEO? Good. So I think Kalani and Vaibhav got it right. So it is also about acquiring new clients. So what we saw here, okay, is all our set of existing clients. But in a one thing is common, that you are consistently pitching new clients. There's always a new business pipeline where you're pitching for 10, 15, 20 clients at a time, depending on the size of the company. Okay. And you can reasonably estimate how these pitches are going. And you can put a probability that, okay, pitch number 1, probably I have a 70% chance of winning. Pitch number 2, I have a 40% chance of winning. So basis this, you can do a reasonable estimate of what your new business is going to look like. Okay. Now, how do we do that? Now, one way to do this is, now everybody said new business we have to achieve, but how do I put that in the Excel sheet to complete my budget? There are two options. One is I can just put a new business line item. I can just put a new business line item, okay, and just capture some phasing, capture some amounts here on every month. That is one option. The second option is a little bit more scientific option. I will try and estimate what would be an average client win. What would be an average client win for that particular month or any particular month? So how do I do that? I will just put some placeholder and say client 1 retainer, I will probably win from, let's say, March onwards, or let's say from April onwards at $2.5 million. Yeah. Or maybe let's say $3 million. Yeah. Okay. So client 1 is not the only client that I'm going to win during the financial year. I have a big team. They're consistently pitching clients out there, trying to hunt clients out there. So maybe there'll be one more client 2, another retainer that will probably come to us from May onwards. Let's say another $3.5 million. Yeah. Or maybe let's say $2.5 million. Yeah. Okay. Now, still there is some shortfall. I can keep adding like this, but I also know that we win some projects, like how I won the Ministry of Tourism project. I can also win some project, maybe let me put a modest target of $1 million project every quarter. Right? Now I'm putting this as a placeholder at the end of the quarter. This does not mean that the project will come exactly on the 1st of March. No, it might come anytime between Jan to March. One project might come anytime between April to June. It may also happen that I might get a $4 million project in February. That may also happen. Right? But as of now, I have to take some reasonably intelligent guess and then try and put some placeholders here. Now, where are we with this? We are at 9.9% growth and the management was expecting 12% growth. So how can we plug this number? Maybe let me increase the project size a little bit to 1.5 million, maybe another 1.5 million. I'm at still 11.5%. So maybe let me increase this to 3,000. Yeah, 12.3% growth is what I have achieved. How did I arrive at this number? Let me recap again. Okay. In a services business, you're consistently pitching new clients. Okay. Basis the assessment, basis the probability that the business lead is comfortable with. Okay. I have put some placeholders that, okay, on an average, we can win one client a quarter. So can't we win two clients throughout the year, right? So we have been one. So I put one client starting from April onwards at $3 million retainer, client two from May onwards. And maybe they'll pay us more in the initial months for setting up things and then the retainer will slow down. And then there are some projects, average one project a quarter we can win, right? No harm in that. That is probably a reasonable guess or a intelligent guess basis the discussion and the probability assessment of the pipeline that I'm discussing with the business lead. Now, what are these called in technical terms in the B2B services business? The $87.3 million that you had computed in the first instance from your existing clients, that is called confirmed new business or identified new business. Okay, confirmed new business. And the placeholders that you put as client one, client two, so the unidentified new business, which means I don't know where this business is going to come from, but $54 million of business is going to come from new clients in 2024 from some client in the pipeline. I don't know exactly which client. Okay. Now, a question for you guys. The unidentified new business proportion is 38% of the total revenue budget for 2024. Is 38% high or low? Type your responses in the chat box. Come on, fast. Is 38% unidentified business high or low? Okay, Kalani says high. Come on, more responses. High or low? Type fast. Okay, high. Pranav says high. Okay. So most of you are feeling that this number is high. Okay. And most of you might be right. But how do we assess this, whether it is high or no? On an average, if in the last 3 years of my budget exercise, if I have achieved anywhere between 30 to 40% unidentified new business, then this number is not high. Okay, I have a track record of achieving this. But my last 3 years historical average has been ranging between 15 to 20%. Then this 38% seems high. Then I have to go back and ask for some extra evidence or extra information to the business lead that, hey, 38% unidentified new business we have never done before. You know, is there anything significant? Is there any special client that is going to come this year which is going to help us achieve this? Right? So it's my responsibility as FP&A team to go and ask these questions. Okay. Concept of unidentified new business and confirmed new business. Now, in some businesses, the unidentified level could be as high as 60-70%. Think about an architecture firm or an interior design firm who works on project to project. There are no retainer-based businesses. Okay. Once you complete a project, you have to go and hunt for a new project in the market. In which case, unidentified business could be as high as 60-70%. Right? In some businesses which are stable, it could be low. It could be 10-20% only. Yeah. Again, depends on the nature of the business as well. So let's do a quick recap. I set my template. I went through my notes and tried to compute my entire 2024 budget. Okay, and I introduced you to the concepts of unidentified new business and confirmed new business. Okay, and here is my budget, $141.3 million. I'm now going to submit it to the CEO for approval. Okay, now a question must be running in your mind. There are about 7-8 clients here. Okay, and maybe 3 clients of placeholders, right? So this is a pretty easy calculation. What if there are 800 clients? How do we manage this? Now, again, the technique to that is that about 20-25 of your top clients would probably be accounting for 50-60% of your revenue. So there you will go and discuss with the business leads or the project manager one-to-one. For the other 750 clients, okay, what you will do is you will extract the information from the CRM. CRM is your customer relationship management tool, where you have the details of the contract, how the relationship is going, what are they asking for, all the data is recorded there. Basis your analysis of the CRM, you will then prepare a template and send it out to different project managers. They will fill in the estimated revenue coming from these clients and then send it back to you. Okay. They will be assessing whether the escalation, there'll be any escalation in the retainer or no, whether any new projects are being coming from this client or no. All of that assessment is done and they will send you the templates and then you will compile it, analyze it. And if you have any questions, you will ask them. Otherwise, you can accept it and finalize. Okay. B2B revenue budget case study. Let me just quickly share this Excel file in the chat box. Once you download it, just type done in the chat box, and then we'll proceed to the next section. Okay, I've shared it in the chat box. Those of you who have logged in from your laptops, make sure that you download the Excel sheet. And once you download, just type done in the chat box, and we'll proceed to the next section of the workshop. Okay, I only see one done message so far. Are others able to download the Excel sheet? Okay, I see a couple of more dones. Okay, let's proceed further. So I told you about the three main activities of FP&A function. So we just saw the example of a budgeting exercise. Now what we'll do is we'll now look into the forecasting bit. Okay. Now the budget table that you see here, budget 2024, this is a abridged version of a budget that you have prepared for 2024. So there is revenue, there is cost, there is operating profit. This is how the revenue is broken down every year. Now, what is a forecast? Forecast happens during the financial year. So now your January actuals are with you. You are at the end of 31st January 2024. And you can now see that the actual numbers are turned up. And then you can see that the label has changed from BUD to FOR. Okay. Now this is your forecast from February to December. Okay. So this is called 1+11 forecast. 1 month of actuals, 11 month of estimates. Now here the numbers are coincidentally similar to the budget. Now these numbers may change also. I can make this 105. I can make this 107 depending on the estimate that I have for the coming forecast. Now I have moved 2 months ahead, and now I have my actual numbers till the end of March 2024. Now what is this forecast called? 3+9 forecast. 3 months of actuals and 9 months of forecast. Again, coincidentally here, my numbers are exactly similar to the budget, but these may undergo a change. It's not necessary that they need to be same. It can be 105, 107, 110, 112, depending on what my best estimate is for the forecast. And here, if somebody asks you, what is the budgeted revenue? The budgeted revenue is $1.35 million. What is the forecast revenue? Forecasted revenue is $1.36 million. You see, a budget number once prepared just before the start of the financial year and approved by the board, it's a frozen number. You don't keep revising the budget every now and then. What you check during the financial year and keep a track of is the forecast. After June, what I'll be preparing? Q2 forecast or 6+6 forecast. After September, 9+3 forecast. 9 months of actuals, 3 months of forecast. Okay. So this is the difference between a budget and a forecast. A budget is a one-time activity carried out just before the start of the financial year to help you understand the estimated revenue, costs, and the operating profit. Whereas forecast is an ongoing tracking the ongoing performance of the business. You can prepare forecast at the end of every month. You can prepare forecast at the end of every quarter, depending on how your company is following. Okay, that's the difference between a budget and a forecast. I hope you are able to appreciate the difference. Now then comes management commentaries. In your management reporting, you will typically end up doing two types of analysis. One is variance analysis. You will do different comparison of numbers. Actual versus budget, actual versus forecast, current month versus previous month, current quarter versus previous quarter, current year, year to date versus previous year, year to date, all of these different kind of comparisons, and try and understand the business reasons behind the variances. Okay, Anirban has a question. If the budget is static and forecast is dynamic, what is a rolling budget? No, there is nothing called as rolling budget. What is there? There's something called as a rolling forecast. Rolling forecast is nothing but you also extend beyond the next financial year, which means, for example, here you don't stop at December. We'll also look at next rolling 12 months, which means rolling January, February, March as well. So at the end of March, you will be preparing a rolling forecast from April to next March. At the end of June, you will be preparing a rolling forecast from July to next June. So at any given point in time, you have a rolling 12-month view of how your business is going. That's why it's called a rolling forecast. But however, the catch is that most of the companies use the term forecast and rolling forecast interchangeably, which means they might actually be preparing a traditional forecast, but they may be calling it a rolling forecast. That's also wrong. The technical definition of a rolling forecast is a rolling 12-month view of your business. Okay. I hope that clarifies the difference between forecast and rolling forecast. Okay. So then variance analysis. Then the second analysis that you will be doing in your management reporting is profitability analysis. Every company will be structured in a different way, right? They could be structured branch-wise, region-wise, business unit level, product level, right? Depending on how your company is structured, you will be doing different types of profitability analysis. For example, when I was working with an oil and gas company, I used to do something called as India operations were divided into 16 territories headed by a territory manager. Okay. Then when I was working with an advertising agency, we used to prepare client profitability because we wanted to know how much each client is contributing to the profits and which clients are loss making, which clients are profit making, right? So depending on how your company is structured, you will be engaged in doing different types of profitability analysis. Now, let me show you a quick management report example. I mean, we'll not get into the details, but I just want to give you a quick overview of how this looks like. So this is a budget presentation, okay? Budget presentation, okay? So this is how a budget presentation meeting happens, or let's say, and the budget presentation meeting happened a little bit late in this company. So 2022 actuals were completed, now 2023 budget was going to happen. So how the financials are doing, again, what is the revenue that we are estimating? What was the actual revenue for 2022? How did it compare with 2021? And then what was the 2022 financial highlights, right? So we covered 24.4 million, 61% of staff cost, 152 headcount was our headcount. This is a services-based business. That's why headcount becomes important. Which department did well? Department 1, 2, 3, 4. Which one scored higher? Which one scored lower? You indicate them with your green and red indicators. And what are the growth percentages? Which one did well in 2022 compared to 2021? And then you start talking about the 2023 budget. What are we planning to achieve in 2023? See, again, same concepts. So $20 million is confirmed new business. $6.9 million or nearly $7 million is unidentified new business. And unidentified new business is 25% of the total revenue that we want to achieve for next financial year. Okay. What are we looking at, and how the last 5 years have been, and where do we stand in terms of 2023 budget? What we are planning to do is achieve at least 12% growth over 2022. This is a quarter-wise breakdown, which quarters are low, which quarters are heavy. How does it compare with the quarters in the previous year? Then again, department-wise 5-year view. Okay, which departments have done well, which departments on the rising trend, which departments are on the losing trend. We discuss all of these things in the budget presentation meeting. Again, revenue and salary costs are the two most important metrics. So those are represented here. Okay. You can also see that January revenue actuals had already been closed by the time we did our budget presentation. So February, you can see unidentified new business in orange, confirmed new business in blue. The unidentified new business is heavy during the last quarter. You can also see the staff cost, which is fluctuating, because we are making some investments in people in the early part of the year, and they will start performing and they'll start bringing in more revenue by the end of the year. So that's why you will see that the staff cost has come down from 66% to 58, 57, 59 eventually during the end of the financial year. Again, some of the analysis about how these departments are doing, a quick traffic light view of which departments are not been performing well, which departments have been performing well, red, amber, and green. That gives a departmental view as well. But again, this is one of the examples of a management report. You keep preparing these kind of reports on a quarterly basis, on a monthly basis, depending on how your company is structured. This was more of an example of an annual budget meeting that we would be discussing with all the business leads and the CEO in a room. So that was the reason why this presentation was prepared. Cool. So that's one more example for you to kind of decode. So we covered budgeting, we covered forecasting, and we covered an example of a management report as well. So what will be the stakeholder interaction for you, right? With HR, you will always be discussing things like workforce planning, headcount forecasting, estimated salaries, incentives, new hire phasing, all of these things you will discuss with HR teams. As an FP&A professional with sales teams, you'll be discussing about revenue forecasting, pipeline analysis, sales KPIs, incentives, sales officer commissions, all of these things. Then marketing team, you'll be discussing the marketing campaign ROIs, campaign performance, return on advertising spends, marketing budget allocation. All of these things are discussed with marketing leaders. With operations and production, you will be discussing about capacity utilization, planning, productivity, yield ratios. All of these things are discussed with the operations and production team. With supply chain management, you're discussing about inventory optimization, working capital optimization, freight cost analysis, storage cost, inventory carrying cost. All of these things you'll be discussing with the supply chain management. So at regular intervals, you will be collecting a lot of inputs and updates from various business teams and providing and helping them with reports and insights to take some decisions in the company. That largely will be your FP&A role. Again, to reiterate the fact that none of these aspects are related to our accounting standards or audit or compliance or taxes or anything like that. These are all commercial in nature. These are all part of the performance management side of the business. Okay, so how do you prepare for FP&A roles? So if you have been working in accounting and compliance focused roles over these years, then what are some of the techniques for you to transition into FP&A roles? First, start by leveraging the sector experience. For example, if you have been in the accounting function or audit function of an insurance company, try and look for an FP&A role in an insurance company, because the business familiarity will at least give you some percentage points edge when you're applying for that FP&A role. Study management reports. Even in your accounting function, make friends with the FP&A team or the commercial team and try and study some management reports. How does a budget look like? How does a forecast look like? How does a management dashboard look like, or a CFO dashboard look like? Try and look at these, be inquisitive about these reports, and try and study some management reports within your company as far as possible. Make compliance your bridge. Let's say if you're working in the accounting and audit function, or you're working with an accounting and audit firm, then using your compliance knowledge, you can transition over to the industry side, work for a couple of years in the industry, and then start slowly looking at roles which are commercial in nature. It not happen overnight that, okay, today I want to apply for FP&A role and some company will give you an FP&A role. That's not going to happen, right? So you'll have to plan it step by step and slowly transition over to the FP&A side. Tools like Power BI and Tableau can be a plus, right? Because a lot of analysis is involved. Knowing Power BI, Power Query can be a plus. Are they a substitute for your core accounting, core FP&A knowledge? No, but they are an aid for your core FP&A knowledge. Okay, if you know these tools, your life in FP&A becomes easier. Create a reason with a qualification. So today, certifications are available. Today, coaching programs are available for FP&A. So these certification programs will give you an edge where you can say, okay, chartered accountant and certified FP&A professional with so many years of experience in the sectors of so and so, so and so. You can start with a strong profile para. MBA finance with 15 years of experience and a certified FP&A professional in having worked in industries like software, blah, 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 blah. If you start with a strong profile para, then you have a higher chance of getting that interview call. Okay. Now, let's do a quick recap of what we have covered so far. We started by understanding the difference between the controller and FP&A world. How does he work with? What are some of the technology conversations? What are some of the stakeholder interactions? And then comes the key activities in FP&A. That's your budgeting, forecasting, management reporting. We saw some examples. We saw how a B2B revenue, service company revenue budget is built from scratch. And then how do you transition into FP&A? What are some of the techniques that you can use to transition into FP&A? Now, with accounting and audit and taxes getting automated with AI and everything coming into play, right? CFOs are looking for people who have analysis and decision support experience, right? And we have done our own CFO survey, and most of the CFOs are looking for 5 critical skill sets today in the finance team members. One is core FP&A concepts: budgeting, forecasting, management reporting, gross margins, net margins, scenario planning, all of these things. Then comes financial modeling skills. Financial modeling specifically to FP&A, right? This is your scenario planning, sensitivity analysis, revenue models, business models. All of these things comes under the financial modeling. Then comes your data storytelling. It's not only important to analyze, how do you communicate this analysis in a very seamless way, in an easy way for the non-business, non-finance stakeholders to understand? That's where your data storytelling skill sets come into play. Business partnering, your business acumen, your ability to build cross-functional relationships, help the business teams in taking decisions. That is what is business partnering. And then, of course, leveraging technology and AI in the finance function. All the technological developments that are happening in the data science and AI field, you need to leverage that in your finance role. So these are the 5 core skill sets that CFOs are looking for today in their finance function. Now, what can be done about it? We did our own CFO survey, and interestingly, 79% of the CFOs said that it is generally difficult to find the right FP&A talent. Everybody is looking for experienced FP&A professionals, but there are just not enough FP&A professionals out there, right? So what can be done about it? This is one of the great times, or one of the great moments for you to acquire a certification in FP&A. That will at least get you an interview call. And then how you convince in the interview, that's up to you. But at least that will get you an interview call. Yeah. So with these, identifying these gaps and with consultation with many CFOs, so we have developed our own certification program in FP&A. It's called the CGFPA program. It's called Certified Global FP&A Professional Program. So what is the program about? It's a global FP&A certification curriculum developed by CFOs and FP&A leaders. It has 10 solid modules, which we'll talk about in a while. Again, through experiential sessions. Now, we discuss a lot about through case studies, simulations, group discussions, activities, role plays. That's how we kind of try and teach you these MBA style and not just some books. You'll also be part of the Global Alumni Network. FPI courses are taken by students with more than 100 countries now. You'll also get a session with a personalized career coach. You will also get placement support. I'm not saying placement guarantee, but placement support in the sense reviewing your LinkedIn profile, reviewing your resume, connecting you with certain recruiters. On an average, we keep posting 2 to 3 jobs a week on the alumni community. Right? So all of those support will be provided to you. Access to monthly Q&A sessions. We do Q&A sessions every month so that you can come and ask us questions directly. External speaker sessions where we bring in CFOs, experts, and many more share what's happening latest in the FP&A world out there. And all of it is accessible to you through easy online portal, recorded courses, and test materials and everything which are available to you at your disposal. Now, to talk a little bit about CGFPA program, there are 10 comprehensive modules in the program. Okay. So what are these modules about? I'll let Asif cover the first 5 set of modules, and then we'll talk about the other 5 modules. Asif, over to you.
Yeah. So let me start with the budgeting forecasting module, where we cover all the basics of budgeting forecasting, including budgeting methods, the top-down, bottoms-up approaches, zero-based and incremental approaches. And we do this through case studies and example. Also, there is a capstone project where we give you data and walk you step by step how to prepare a budget presentation for a CFO, and at the end you have to present that to the class. Management reporting, we look at most the common management reports used across industries. So some examples I'll tell you is month end or a quarter end report, the flash reports, the risk and opportunity reports, performance management frameworks like balance scorecards, KPIs, OKRs. So these are some of the concepts covered along with examples, real life case studies, and simulations. Financial modeling is specifically focused on FP&A. So we share all FP&A related use cases where you could apply financial. Firstly, we teach you how to create financial models, and then we also share what are the use cases, how do you use it to build a revenue models, how do you do scenario planning, sensitivity analysis, cash flow forecasting, capital budgeting, all of those which are used in day-to-day work. So that is about Apply for Finance, and FP&A is now a new module which was introduced a few months back, where we cover AI tools like ChatGPT, Copilot, and more and other newer tools. Idea is to show you same thing we used to do in Excel earlier. How that can be done in much more faster and much more efficient way using AI tools, so that can save you time and effort. So that is about the core modules that you see on the left side. And then on the right side, we have some advanced modules, which I'll let Dhawal cover.
So thanks. So one thing that is common in your FP&A role is that you will be dealing with large sets of data. And so it could be financial data, operational data, and you need to know your way to navigate through this data. That's where we cover basics of Power BI, Power Query, and SQL. We don't claim to make you experts in this, but at least take you to a level where you are comfortable dealing with these tools and dealing with large chunks of data as well. Financial analysis, again, not just ratio analysis. It is all about your different kinds of profitability analysis, recharges and allocations, largely looking at financial analysis from an internal CFO standpoint. That is what is covered in the financial analysis module. Storytelling and presentations, right? How do you communicate your story to the business teams, right? So what are some of the popular storytelling frameworks, best practice presentations, CFO dashboard? How do you prepare all of that? All of that is covered in the storytelling and presentations module. Then comes strategy. All the strategic decisions taken in the company would be incomplete without sound financial analysis. So in the strategy module, we look at different popular strategic frameworks and try and connect these frameworks to how FP&A is going to support to these frameworks. Let's say if you are to expand to a new geography, you need to do a sound financial analysis to decide whether you want to expand in that geography or not, right? So all of these strategic decisions and how are they interlinked with FP&A is covered in the strategy module. And then comes business partnering. How do you build strong cross-functional relationships? How do you develop business acumen? What are some of the ways you can truly collaborate with various cross-functional team members? That is covered in the business partnering module. So all in all, 10 solid modules, everything that you need to be successful at FP&A. Don't think about CGFPA as a course. It's a supercharged program. 20 years of Asif and my FP&A experience compressed into these 6 months, right? It can probably propel you 5 years ahead. Right? So that's how the CGFPA program is designed. And the premise that we kept in mind for designing the CGFPA program was that if Asif and I have to hire a FP&A manager today, how would we train that person in the quickest possible time? That was the premise that we kept while building the CGFPA program. Now, what is the eligibility for the to have a bachelor's degree or a global equivalent in finance, accounting, or business? Or alternatively, you may have any of the qualifications like CA, CMA, CPA, ACCA, or equivalent. Okay, we don't claim to be a substitute for your primary qualifications. It's more like a supplement to your primary qualifications. Okay. And how will you be awarded the CGFPA? There are 2 conditions. One is you attend the live online classes for at least 50% of the times, which means 6 months. Every Saturday we meet for 2 hours. Okay. You need to attend at least 50% of the classes live and submit your capstone project, which Asif earlier mentioned about the budget presentation. Once you do these 2 things, you're eligible for the final examination. The final examination is a 2 hours, 50 marks multiple choice questions examination. And once you complete that examination, you will be awarded the CGFPA certificate. And we are also recognized by CPD UK, so you can claim your continuing education credits against your qualifications as well. Okay. And the ROI of a valuable course like this, which is going to fast track your career easily by a few years, I leave it to your imagination. The course fee investment in this program is $1,595. Okay. There's also an option to pay in 5 installments. The duration is going to be 6 months. Every Saturday, we are going to meet live for 2 hours. Typically, it will be Saturday evening. You will be meeting live for 2 hours. And then about 60 to 90 minutes of your own self-study is required, because this is an executive program. There'll be no spoon feeding. You're required to do the work and then come to the classroom, and so that we can maximize the time in the classroom for interactions, case studies, and practical discussions. Okay, so about weekly 3 to 4 hours of your commitment is required in the program. The next batch is going to start on 7th of June. That is when we have planned the orientation. The date that you will need to remember in mind is 10th May 2025. So that's when the first round of applications, the early bird round of applications close. The applications are now open. Asif will be sharing the brochure details and the application link in the chat box. Those of you are interested, whether you decide to do so, that's your call. But at least fill in the application so that you are in the race, you are in the early bird list, and the team can evaluate your eligibility and then come back to you with a response as well. Okay, so make sure that you fill in your applications before 10th of May 2025. Okay, again, don't take our word for it. There are tons and tons of testimonials on the website. You can go through them. You can reach out to any of our alumni who are CGFPA certified. Reach out to them, and then they will tell you how the program was. Many of them have been able to transition to FP&A roles. Many of them have been able to implement a lot of practices in their jobs and get recognition internally within their organizations. Again, the stories are endless, and this is what drives us today. Asif and I have quit our CFO and high-paying CFO and FP&A leader jobs just to help create the next generation of FP&A professionals. That's what excites us today. So, that's a little bit about us. So, yeah, so keep the date in mind. 10th May 2025 is when the early bird applications close for the next cohort of CGFPA program. If there are any questions, we can take them now. Happy to take any questions that you might have. Feel free to unmute yourselves or Anirban, there is an early bird scholarship that we provide. So please complete your application so that the team can evaluate and then come back to you with the offer. But there is a scholarship option available. Yeah, cool. We can take any questions, any thoughts about what we covered today, about the CGFPA program, and we'll be happy to take any questions. And for those of you who are still in two minds, right? So we don't know whether the CGFPA program is for you or no. Ideally, if you're serious about making a career in FP&A with accounting and audit getting automated, we would definitely recommend you the CGFPA program. But if you're still on the fence, you don't know whether whether the FP&A program is for you or no, you can start with our basic program, which is called FP&A class. This is the 4 weeks program where you can go into the recorded version of this and also check out the 4 weeks program. This covers the basics of budgeting, forecasting, management reporting, and data storytelling, at least the base level, the foundation level of it. So you can cover this, and also there are bonus videos that you get, which is your interview preparation blueprint, resume preparation blueprint, and mastermind call access. So you can get these things as a bonus. These will help you prepare for your interview roles and for FP&A interviews, and at least get ready for FP&A interviews. So this is at least the least possible thing that you can do to start your knowledge or start your career in FP&A. Okay, happy to take any questions, any thoughts. Let me see the chat box. Earlier, we used to call this cost management CMA, and is FP&A a steroid version? Just a query, CMA versus FP&A. See, management accounting has been in existence since probably a couple of decades now, right? And what FP&A is that FP&A is not a steroid version, but it's an evolved version of management accounting. With the organization generating a lot of data, finance professionals are required to be more equipped to navigate through this data, analyze, come up with insights, and support the business team leaders, right? So we're not claiming to be a substitute for CMA. It is more like a supplement to your CMA. The obvious
I could add on that
qualifications of CA, ACCA, CMA, CPA, right? So they are largely accounting and compliance focused. They are designed to give you an entry ticket into the corporate world. But as and when you get senior, your role becomes more commercial. Your role becomes more strategic. That is where a program like CGFPA can help you get to the next level in your careers. That's right, Inzamam. So that can be one way to put it. Then we would give your weekend back to you. Thank you so much for joining us today. Asif and I are always available on LinkedIn. So if you have any questions, any thoughts, feel free to reach out to us. Hopefully, we will see you in one of our programs. And don't delay learning FP&A. I keep talking to CFOs every week, and they're struggling to find FP&A talent. So learn FP&A as early as possible. That would be my advice. Again, all the very best for your finance careers. Hopefully, we'll see you in one of our programs.